April 2nd, 2020. Luckin Coffee shares open on the stock exchange. Within hours, they're down 75%. $5 billion in market value evaporates before lunch. The reason? A single press release. A third of the company's total revenue for 9 months simply didn't exist. The investors lost everything. But there's a detail that's usually not mentioned. By this point, the company's founder had already received his money, in good condition, and he walked away. 2017, China. Lu Zhengyao, a serial entrepreneur with a knack for building companies for sale, opens Luckin Coffee. The idea? Cheap coffee via an app, no cashiers, only delivery and pickup. Positioning for Western investors. A Starbucks killer. Tech platform. Chinese market. 1 billion potential customers. In 18 months, 4,500 coffee shops. Revenue growth of 300% year-on-year. All of this is real. The coffee is really sold. The app really works. People are really drinking coffee. But the growth figures must be even higher because the next round of investment depends on growth. Then the scheme kicks in. Starting in April 2019, the company, through affiliated entities, creates fictitious transactions. It sells coffee coupons, vouchers for tens of millions of cups of coffee to companies connected to the founder, Lu himself. The companies pay for the coupons. The money is credited to Luckin as sales revenue. No one physically orders coffee, or orders only a tiny fraction. This is called ring trading. Money flows in and out, creating the illusion of sales. Expenses are also inflated by $190 million to balance the books. A fake transaction database is created. Bank records are falsified. According to the results of the third quarter of 2019, actual revenue is inflated by 45%. May 2019. IPO on NASDAQ. They raise $645 million. Investors see growth, China, technology, a Starbucks killer. They buy. January 2020. Analysts from the Muddy Waters Foundation receive an anonymous report. They conduct their own investigation. 11,000 man-hours of physical surveillance. Employees secretly visit thousands of coffee shops across China. They count real customers, compare them with official figures. The picture is clear. Real transactions are significantly lower than declared. They publish 89 pages of evidence. Company. The accusations are baseless. Shares are falling, but they are recovering. The market is waiting. On April 2nd, the company itself admits everything. On April 6th, another blow struck. It turns out that Lu Zhengyao had pledged his shares for a loan of $518 million. When the shares collapsed, the collateral was liquidated. By then, he already had the money. Investors are holding the stock for a few cents. The founder is fine. June 2020. Delisting from NASDAQ. Lu Zhengyao fired. The U.S. Securities and Exchange Commission fined him $180 million. The Coffee Luckin scandal had direct legislative consequences. The U.S. Congress passed a law requiring all companies listed on U.S. exchanges to provide access to their audited financials. Previously, Chinese companies had systematically refused, leaving no one able to verify their figures. Luckin showed how this ends. The new controlling shareholder is the Chinese private equity fund Centurium Capital. And now here is something that no one expected. The company didn't die. It was resurrected. New management is abandoning unprofitable growth and focusing on real operational efficiency. The app, built for simulation, actually works. Customer data is real. Logistics is real. 2023. The company opens 8,000 new coffee shops in a year, almost one every hour. Revenue exceeds Starbucks China for the first time. July 18, 2024. Opening of the 20,000th store. June 30, 2025. the first 2 stores in Manhattan, New York City. Coffee for $2 to $3 versus $5 to $7 at Starbucks. The company is preparing to relist on NASDAQ, the very exchange that kicked it out. It was built as a scam. It turned out to be a true Starbucks killer. The founder planned to take the money and leave. The company took the money, went bankrupt, and won the war it declared. Starbucks in China has seen a decline in revenue in 2024 and is considering selling its Chinese business. This ending was not planned.